Hi folks, David Waring here again with InformedTrades.com. In our last lesson we looked at the flag and pennant chart patterns, two patterns which can be considered continuation patterns when they show up on a chart. In today's lesson we're going to look at specific strategies for trading each of these patterns, complete with entry and exit points. So let's get started.
Okay, so as we've learned in our last lesson, when you spot a flag pattern in an uptrend, this is a bullish sign, as the market consolidation which forms the flag is seen as a pause before a resumption of the original uptrend. As this is the case when traders spot flags in uptrends, they're going to commonly look to enter a long position. The point at which they're going to look to get long is going to be the break point of the upper resistance line of the flag, and then the target for the trade is calculated by measuring the flagpole, or the distance between the high point of the run-up and the low point of the run-up that forms the flag, and then projecting that distance upward from the break of the top resistance line. Alright, the stop is then placed just below the bottom support line of the flag. Alright, so let's look at an example here. We've got our chart of REM up from last lesson, and we have our bull flag there that we looked at in last lesson. Alright, and we see the break here of the upper resistance line. So that's where we're going to look to get long. The target for the trade is then calculated by measuring the distance between the top of that pattern there, or the top of the run-up, and the bottom of the run-up. You can see it starts there at the bottom with the flagpole, and then you can see the top candle there in the middle of the flag. So we get 27 points there by subtracting 80 the high, or by subtracting 53 the low from 80 the high. And that's our target for that buy, and then we place our stop just below the support line there. Okay. The strategy for trading the bull pennant is exactly the same as trading the bull flag, with one exception, and that's where the stop's placed. So let's look at this. We have our pennant here. Same thing here as far as we're looking for a break of the upper line of the pennant, just like we did with the flag. We have that there. Then we look for the distance between the high point of the move up and the low point, and we subtract the low point from the high point. We get 23 points on the move there. And so that is our target for the trade, and then the stop this time is placed just below the closest trough in the pennant pattern. Okay, so that's what's considered the nearest support level there, since you have the two converging trend lines there. So an important distinction. Okay, the bear flag strategy is similar to the bull flag strategy. It's just flipped upside down. So we have our bear flag here. We measure the distance, we have the break of the bear flag to the downside, so we're looking to get short there. We measure the distance from the top of the move down to the bottom. Okay, and we subtract those, we get 15 points, and that is our target from the break point down when we get short, and then we place our stop just above the resistance line. Okay. Excuse me. The bear pennant strategy is exactly the same as the bear flag strategy, with the stop being the only exception there again. So let's look at this. We have our bear pennant here. We have the break there of to the downside of the pennant. So that's where we'd look to get short. We measure the distance of the move there, that move downward that's several candlesticks long. We get 7 points is the distance there. So that's our target for our short trade, and then the stop is placed just above the closest peak to the end of the pattern there. All right. A couple other things to keep in mind here, just as we learned in some of our other lessons, that traders often use volume for confirmation, and this is no exception. Traders like to see volume diminish as the flag and pennant patterns mature, and then like to see volume increase on the break of the support or resistance line, depending on whether we're looking at a bull or bear pattern, for additional confirmation that this is a good pattern to trade. Okay, so that's our lesson for today. You should have a good understanding of how to recognize flag and pennants on a chart, and then how to trade each of those patterns. In tomorrow's lesson, we're going to look at another continuation pattern, which is known as the triangle, which is similar to the flag and pennant. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comments section below, and have a great day.